Breaking news for every American who dreams of owning a home. Mortgage rates just hit their highest level in decades. And if you're thinking about buying a house or even paying off your loan, you need to hear this. Because what's happening right now could trap you in debt for life. Let's start with the numbers. In 2020, you could get a 30-year mortgage for around 3% interest. That meant if you borrowed $300,000, your monthly payment was about $1,200. Affordable? Maybe not easy, but doable for many families. Fast forward to 2025. Rates have jumped to 7% or even higher. That exact same $300,000 loan now costs nearly $2,000 a month. That's $800 more every single month for the exact same house, the same neighborhood, the same walls. And here's the kicker. House prices didn't crash like many people predicted during the pandemic. In fact, in cities like Austin, Miami, and Phoenix, prices are still climbing. That means you're not just paying more in interest, you're also paying more for the house itself. So why are mortgage rates exploding? It all comes down to one word: inflation. To fight inflation, the Federal Reserve raised interest rates, the fastest hikes in modern history. They wanted to cool down the economy, slow spending, and bring prices back under control. But when the Fed raises rates, mortgage lenders pass that cost directly to you. That's why borrowing money for a house, a car, or even on your credit card suddenly feels like burning cash. On top of that, America is drowning in trillions of dollars in national debt. Lenders look at that and say, we need protection. Translation: higher rates, tougher loan approvals, more hoops for buyers to jump through. Let's put this into perspective. Back in the year 2000, the average U.S. home cost around $120,000. Today, it's closer to $400,000, and in many big cities, double that. Meanwhile, wages? They haven't even doubled. In fact, adjusted for inflation, many workers are earning the same or even less than 20 years ago. This is why you're seeing headlines like "The American Dream is Dead" or "Home ownership is out of reach." For millennials and Gen Z, the dream of owning a home feels more like a nightmare math problem. And it's not just about houses. High mortgage rates ripple through the entire financial system. They push up the cost of credit cards, auto loans, and personal loans. If you're carrying debt right now, you've probably noticed your minimum payments creeping up. That's not your imagination. That's the Fed's hikes draining money out of your wallet every month. This isn't just a housing problem. It's an everything problem. So here's the million-dollar question. Will the housing market crash? Some experts believe yes. If rates stay this high, sellers will have no choice but to cut prices. We could see a repeat of the early 2000s, where homes suddenly lost value overnight. But others argue the opposite. With housing inventory still low and demand still strong, they say prices will stay stubbornly high. Instead of a crash, we may be facing something even worse: a slow bleed. That means fewer and fewer families will ever be able to buy. Home ownership, once the cornerstone of the American dream, could slowly become a privilege reserved only for the wealthy. For you, let's talk solutions. If you're renting, don't panic, but start saving aggressively. Even if it feels slow, build a down payment fund. Consider side hustles, online businesses, or investments that outpace inflation. If you already own a home, congratulations, you're in a safer spot. Refinancing at today's rates may not make sense, but focus on paying a little extra toward your principal whenever possible. Even $100 more a month can shave years off your loan. And if you're shopping for a house, be realistic. Don't stretch yourself into a 30-year nightmare loan just because you fear missing out. A house is supposed to bring stability, not financial chains. The truth is, we're living through one of the most expensive housing markets in American history. Banks are cashing in, builders are cashing in, but the average American family, they're just trying to survive. And here's the scary part. This mortgage shock might only be the first wave. If rates stay this high or climb even higher, the impact could shake not just housing, but the entire U.S. economy.